Okay, let's explore this warranty expense problem where we are also going to prepare an income statement and a cash flow statement. So here's the problem that you see up here. To support herself while attending school, Dawn Deloche sold stereo systems to other students. Now during the first year, she purchased stereo systems for $166,000 and sold them for $312,000 in cash. She provided her customers with a 1-year warranty against defects in parts and labor, and based on industry standards, she estimated that warranty claims would amount to 4% of sales. During that year, she paid $2,560 cash to replace a defective tuner. So let's tackle requirement A1 that you see right here. Prepare an income statement for the first year of operation. Rocky gets a little bit excited about this problem, but hopefully he won't bark. All right, so what do we know? We know there was sales revenue. This is the income statement. Well, I mean, you certainly want to put a title on it, right? So Deloche Stereos and income statement. I'll format this in a little bit for us. All right, so we're going to have, and we don't know what year it is, but it would say for the year ended, right? So we're going to have sales revenue, and we're going to have cost of goods sold, and that's going to give us gross margin. And then the only other expense we're aware of, if I can spell gross margin correctly, is the warranty expense. So the end result would be net income, right? We're not considering income before taxes, nothing that sophisticated here. Okay, so sales were $312,000. 312,000. Let me format all of these. Cost of goods sold is next. They told us cost of goods sold was $166,000. So gross profit would be the 312 less the 166. We'll let Excel do the math for us. And warranty expense was, what did they say? 4% of sales. So we'll take the 312 times 4%. You can actually put a percent sign in Excel. We get 12,480. So if I were to put that in there, I would come up with net income equal to 133,520. And we probably want to double underline that and produce it that way. Okay, now typically this gets centered, so we'll format that a little bit, and that would be the income statement. Okay, next we want to work on the statement of cash flows. Okay, now I've made a couple changes here. I've added for the year ending, if we had one. If we knew what year it was, we'd have a line in here. But let's get started on the statement of cash flows. So what we're going to have here is cash flows from operating activities. And in this case, we're going to use the direct method, right? So what are we going to have? We're going to have inflows from customers, right? Probably want to indent that a little bit. Probably indent a couple others. Right, we had inflows from customers would be the 312,000 that we got in cash. I'll just point to over here. And then we're going to have outflows to purchase inventory. Something like that. Outflows, inventory purchases, probably some label like that. And that's going to be equal to 166,000. Okay, then we're going to have outflows for warranty expense, right? And in this case, let me format that the right way. Line it up right. In this case, they told us that the cash flows that was actually paid was $2,560. Okay, so the next line down we would have would be net cash flow or net cash flows from operating activities is how I would label this. And I think I would indent it one more, but it's always hard to say how that would get played out. Let me move that a little bit there. And now since we've got inflows and outflows, this one, by the way, I didn't make the numbers negative. Sometimes you'll see those presented as negative numbers. You know, an outflow being negative and an inflow being positive. All right, so we're going to have the inflows minus the outflows. So minus that and minus that. Right? Oh, I made one mistake there. Let's do that again. Equal that minus that minus that. Now that should work. Yeah. So now I've got 143,000 of net cash flow from operating activities. Now, what else do we have to have? Well, we need to have cash flow from investing activities, but there are none in this example. And we need to have cash flows or cash, yeah, these should all be plural, cash flows from financing activities. And there are none there as well. Let me put that S in there so we get this spelled correctly. All right, so we're not going to have anything there. We can either put zeros or leave it blank. And then we're going to result in a net change in cash plus, add the beginning cash balance. And you'll compute the ending cash balance. Okay, so that's the steps you have to go through. So we've got 2 zeros there, so the net change in cash, I'm going to underline this, is going to be equal to that 143,440. Since this was the first year of operation, I've got another 0 in there, another underline, and we have an ending cash balance, net change plus beginning, 143. And we probably want to format this the same way as here. Put a dollar around that. Okay, and that's this problem. So I hope you found that helpful.